Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 29th, 2018. It will be an abbreviated trading week. Early in the week, I didn't catch that. A member pointed that out in my Monday, or I think it was Monday's video. Thank you for doing that. Tomorrow's Good Friday, so the U.S. markets are closed. That gives us 3 days of what we call overnight risk as a swing trader. Therefore, as I said in some of the updates today, best to I wouldn't go too heavy, long or short into the weekend. And what I'm going to do in this video, by the way, is just review all the trade ideas. And as I said and covered in recent videos, we have a pretty eclectic mix, a diversified mix of different commodities, different asset classes, stocks, bonds. We have longs and we have shorts. And right now, we seem to be firing on just about all cylinders. So I'm going to go over the trade ideas. Real quick, a look at the market. This is QQQ. I posted this chart earlier. I posted a 60-minute and 15-minute, even a 5-minute in the trading room. I mentioned 159.34 resistance. I really should have focused on this. See this previous reaction high here, which actually comes in right at the 50 or 38.2% Fibonacci retracement level. This is the fib line. Basically, what I did is grabbed from this point here, this reaction high to this move down. If you're not familiar, a quick Google search on Fibonacci retracements or Fibonacci trading, you can do a little homework on that yourself. But a lot of traders will trade exclusively off fibs. I, like any other, technical tool and technical analysis, I incorporate it into my trading. And what I very often notice is that the levels that even if I mock up a chart and put my support and resistance levels without the fibs, after adding the fibs tend to come in and line up very well. So I had, confluence support line here, 159.34. I'm going to raise that because you can see again we had a previous reaction high here. That would have been the safe level, and we tested that once. This is really the resistance level now. Call it 159.80 round off. The Qs need to pop, and I still think we'll see that. I mentioned I just took in a long earlier today, but I'm going to just protect myself with a break-even stop. And if it pops, so I may even add to that trade. I think we could see a little bit of a little ramp into the close as traders try to square off their positions. Undoubtedly, there's quite a bit of shorts in the market right now, more than there were a few months ago. And there's also long, so it really comes down to supply and demand. I can't tell you with the greatest degree of confidence we'll see a ramp into the close. Maybe there's more longs nervous about the 3-day weekend than there are shorts, and so they unload those positions. But either way, technicals are technicals, so watch for a little pop above that 159.80, maybe get a little move up here. And these are the targets. They probably wouldn't happen today. If we do pop today, probably anything's possible, but that'd be a pretty big move. We're already up 1.19% right here, and we were up a little higher. So to hit that uppermost target, that's another 1.69. I really doubt we'll see that today on a low volume trading day before a 3-day weekend. So at most, that's what I'm looking for is another move up here at about 160.88. And again, that's quick intraday trading stuff. And if we do pop next week on a gap, you can see some potential targets. This downtrend line 161, a 162, we'll call that 165.64. So those would be target levels to look at next week. And if we go the other way, we gap down below the recent lows. Obviously not so good because that just puts us down. Really takes out some pretty solid support. I should put a line there. And you can see, we had a reaction low back here. We had reaction lows here. This was the brief, final capitulation sell-off in that last thrust down. So market's in a precarious position, but again, we're at trendline support on the daily chart. I'm sorry to get off topic, but I figured might as well kill two birds with one stone, do the market update, and then get to the trade ideas here real quick. There it is. There's that long-term trend line. It goes back even to the left of this chart, back to the mid 2015 lows. And so there you have it. You have QQQ, although SPY is already broken down, QQQ is still at support, coming off a divergent high. That's why I'm not so crazy about buying this support. But like I always say, support is support until and unless broken. So just to go crazy short here is could be premature. We could push up, have another thrust up within this, wedge, extend these divergences, maybe even possibly make another high. Anything is possible. Hard to see right now, but it's certainly a possibility. And therefore, at least I am trading, with a lot of mix of different different securities, different asset classes. All right, to the trade ideas. This will be pretty quick. Kane hasn't started playing out yet. I still like it. Again, any one trade, I don't get married to any one trade. If they take out the stop, so be it. We move on to the next one, and I'll look to reposition back. But I still think this one's poised to pop. Commodities are where we're seeing a lot of inflows now. I'm on a related note, since they're not official trade ideas, but I have covered them in the recent video on commodities, and I covered them yesterday, I believe, in the video. Both wheat and corn seem to be moving nice today. I mentioned them coming back to these well-defined support levels after that initial rip up. And there's 1.1.5% gain in the wheat ETN today, and the futures are up 1.57. I'm looking at another monitor. Corn is nice rip. Look at that, 3.75, and I mentioned that one again yesterday in the recent commodity videos. This is that support line. So we had technicals just working so nice lately, even on these ETNs. Look at KISS support right there. Shame on me for not adding it back as an official trade idea then, but either way, it was highlighted before and after. And big move today. Would I chase here? Probably not, but I think it'll go higher. I think it'll continue higher. Maybe comes back. If you want to look for the next objective pullback, it'd be right here about 1763. That's where I had a support line. There's a little gap through that level. Actually, you could probably zero in, maybe target the top of that gap and pull back 168-ish. I'm sorry, 1768-ish. But again, let's get back to the official trade ideas, and I'm just going in order alphabetically as they're listed. Comcast. Again, another one that's playing out so far was based off the 60-minute chart, although I started there a second ago. That was the daily chart showing Comcast at support. Almost all my trades, even if the trade parameters, the price targets and stops are all based off let's say in this case, a 60-minute chart, I will make sure it aligns. In fact, I put a higher weighting on the daily chart. My favorite setups are oversold pullbacks to support. Like I said here, deeply oversold. Last time we were this deeply oversold in Comcast was back here, and the stock went from there, from the lows to the highs. And see, just playing a game of the lows high. Not that you would have caught every penny of it. That was about a 47% move. But even the initial rally before any correction was a 40% move. And now, do I expect that again in Comcast? No. Is it possible? Certainly. So, like I said, this trade has the potential to morph into much more. But my point being that the basis for this trade was oversold at support on the daily chart, but then that in itself is not a reason for me to go long. Sometimes you can either trade there, you may cut through that support. The 60-minute chart and these divergences right here, we had a divergent low. That was the reasoning. So nice move today, up another 2.46, approaching that first target. Remember, if it hits, the first target comes in right around where the downtrend line hits this horizontal resistance level, which is actually 34.46. I always set my price targets a little bit below the actual resistance on longs in case the trade reverses. So Comcast looking good. Can't knock it right now. We'll see what happens next week. ENDP, this one, like I said, is covered it a lot lately. We hit the first target right away. We missed the second target by mere pennies, reversed, but so far this thing came very close to testing our stop, but didn't clip it yet. Potential divergence here. If this one can start to move up now, we'll confirm this. We had one divergent low here, a second. No, that was not a second divergent low because see, prices never undercut that previous low. So basically, this is a second divergent low, really an extension of these bullish divergences. So it still has potential, and that's why I haven't cut it loose, nor has it traded the stop, exceeded my stop. Typically, I will stick with the trading plan unless the charts convince me otherwise. Like with XLE, I pulled that one early the other day because I'm expecting crude to move lower in the coming weeks to months here. All right, IEF getting close to this first target so far today. We hit a high of 103.29. First target is at 103.63. And I'll leave these additional targets on now, although I do expect a reaction there. On a related note, we have TLT, which is unofficial trade, but that one is now, look, did we hit the target today? The only reason, like I said, I didn't add it as an official trade is because it's so close and similar in nature to IEF. And that hit a high of 122.29. Yeah, so that target is hit. For those of you that want to know what to do, I think we'll have a reaction here. This is a pretty solid resistance level. If you just look to the left of the chart, look at all these reactions that it's had at that level before from above and from below. Therefore, we'll probably consolidate here for a little while, maybe pull back. So not a bad time to maybe book some profits in TLT, unless you're holding out long term. I think there's maybe some more upside in the coming months, but if what I think happens, I think we get a bounce in the markets next week. I'm leaning towards that. We'll see this risk-on flight of safety into TLT abate with a little pullback, and maybe you can recycle back in on a pullback. So, like I said, actually, I think I've had limit orders in. Those should have been hit already. I should be out of my TLT. IEF has a little more to go. And like I said, it may hit this trend line in reverse, but I set that target pretty well below the actual resistance level. So hopefully we hit that and then get out of that trade, or have an opportunity to get out, recycle back in. But again, if you're holding out for, if you're a longer term trend trader, the chart still looks good. So at most, maybe reaction here and then ultimately move back up in the coming months here. And remember, it's a growth and income trade, so you get paid to wait. Even if you get caught in a sideways trading range, this is a bond ETF. It's kicking out interest. So it's not like a dead money trade where there's no, like a commodity, for example, that doesn't pay any dividends or interest. All right, LABD, I need to close that one out. It's still listed on the, I'm looking at the trade ideas. We hit that first target. I made some comments. Let me share those with you now. Okay, is this comment, some will sometimes get buried. I just noticed a question. Well, I had a question today put down on the original setup for LABU. I'm sorry, LABD, which was the 3 times short on the biotech. I opted to use that because I figured it'd be a pretty swift move up as it was, so it played out well. I think we actually, I'll have to look at the numbers, but I think we would have done better even adjusting for that 300% leverage. I think we would have outperformed XBI, but again, you could have shorted XBI and used a full position. And the question was put to me today, Randy, as LABD has exceeded the T1 target, could LABU be a potential to the bottom of the trend channel? I believe they're referring to a long, taking a long at the bottom of that channel. By the way, if you guys don't notice this, I haven't noticed this already, when you see little dotted lines below anything on the site, on the front page, that's called a tooltip. You just hover and it'll pop up a definition of whatever that term is, because I use a lot of shorthand or acronyms or terms that I've made up that really you're not going to find out on the web. So that's just that. Here's my answer. I can see the potential for a bounce in the biotechs off this downtrend line in LABD, which is also an uptrend line in both XBI, which is the non-leveraged biotech long ETF, and LABU. However, I prefer to wait to see this primary trend line on XBI go with conviction to reshort the biotechs as a potential longer-term swing trade. In fact, I might even short LABU, which is the 3-time long bullish biotech, as I did back in mid 2015. And I gave a link there. You can click on that link. Again, you have to find this post. Just go anywhere on the site. You can go to that ticker drop down box on the front page, or go to the most recent post on either XBI or LABD and click on that symbol tag. What I'm referring to here is, like, for example, this is a post right here. And down below the post, you have all the related posts to it, and then you have these tags. See how they're highlighted, or they change color when I hover? So if you click on that, that's a link, and that'll pull up all analysis on the front page on XBI, and this will pull up all analysis that included LABD, and that's what I did to get to this post. So if you want to read that and then check out this video, there was a bear market back in 2015, and I mentioned that was LA. I spelled this wrong. I'll have to fix that typo. LABU was my preferred proxy, and it did very well. It outperformed LAXBI, even accounting for the, making an adjustment for the leverage. Now, what I'm getting at, here's the chart. This is the primary uptrend line. This is where back here I made the case for a bear market in the biotech stocks. And this was the biggest bear market in many years, even bigger than the financial meltdown in '08. From the market highs in '07 to '09, that bear market. And so, not that I milked every part of it, but I got a good deal of that. And this was a secondary uptrend line right here. or really the primary uptrend line. You can call this a secondary uptrend line as well, but this is where we shorted. And now you can see a very well defined, very similar trend line. What is different now than back then? Well, back then we didn't even have, we had a small divergent high. I should point that out here. Be remiss not to do that. Let's try it here. Oh, here's what's going on. I need to clear this out. You can't see the entire chart. So there it is. We had a small divergent high back then, and right here at the highs, and that's what gave us this sell signal in this bear market in the biotechs. And now we have a much longer, much more powerful divergent high. And if you notice at the very end here, the divergences, excuse me, getting a little tongue-tied there. The divergences are actually steepening, meaning we have a little smaller, little divergent high right here, and that shows through on the daily chart. So what I continue to say in that reply was I think going long here, although it's certainly objective because you're at support, I view it as picking up nickels in front of a steamroller. Maybe there's certainly a bounce play. In fact, biotech's bounced a little since we hit that target yesterday, but I think the upside is limited, minimal, I should say, compared to the downside potential. So I'm looking for the next time around a multi-week to multi-month swing short on the biotechs, not just a quick trade like we had in LA BD recently. So that's my view on the biotechs, and I'll certainly be keeping a close eye on this sector in the coming weeks here. And if you notice this big gain on the chart, I haven't even looked at the headlines. I closed that trade yesterday when the target was hit, but I see a candle up here. These three-time ETFs, especially the ones with a lot of decay, they split all the time. They do a reverse split to keep their share price in a reasonable range. So that's just TC2000 sometimes doesn't update that, as some other charting programs don't until the next day. So that looks like they did a reverse split today, is apparently, and they do that quite a bit on these leverage ETFs. All right, moving on. So there's my thoughts. Maybe a little reaction, but eventually I see more downside in the biotechs, but we don't have a sell signal yet, so I wouldn't. That's why I'm out of the trade. That's why I only had that one target yesterday. Netflix. Not much to say, doing well. Bearish rising wedge. We hit our first target the other day, and there's the reaction. A reaction can be defined as a bounce and/or consolidation. So far, we've traded 2 days. We tried to dip below it, but look at that doji right back up on support there. My actual support line you can see in the pop-up box is at 285.97, and as always on shorts, I set my profit targets just above. Is to help minimize missing a fill because sometimes the buyers will step in early. So longer term, it still looks good. Again, define your trading style. I booked some profits there, and I'll plan to recycle back in, but I'm going to wait to next week. Even if that entails, the only way I won't re-enter is if we gap down too far down here to no man's land. Halfway between my first target and second target. But as I'm slightly leaning towards a bounce here in the markets. Again, slightly leaning towards that. I'd rather just cover up, which I did yesterday, and reshort it. 290, 299, 298 and change. Looks like an objective short entry, but again, I'll take it as it comes. I'll have to look at the charts next week. But longer term, I still favor those targets. Near term, might get a little bounce, maybe, maybe not. NKTR, Nectar Therapeutics. It's just sideways trade, broke down and it's just going in a sideways range. Not so crazy about that. Usually you want to see, I don't care so much for increased volume on short side breakouts. I do like to see volume expansion on long side breakouts, but I like to at least see, the trade start to pan out the way it should. And right now, this one's not. It's just trading completely sideways. I'll leave it on as an active trade right now. But if you're not already short that one, I would hold off. Wait till it starts to pan out and starts moving down in our direction. Let's see what's up next. Sirius XM. Not much to be said. It's playing out nice. Bearish horizon wedge breakdown. This one's based on the 60-minute chart. We already hit that first target, and there's that, typical consolidation. We hit the first target, and we've been consolidating around that support level since. If the market bounces next week, maybe we get a little bounce in this one, but I still like it longer term, still favor all these targets in time. So at this point, you can maybe move your stop down. I'll leave the official stop alone as for this time at this time, but if you're targeting T4, T3, might make sense to trail your stops or move them down a little bit now. Let's see, URGN. This one's also profitable, as are the majority of the trades right now. I think the only ones that aren't is sugar, if I'm not mistaken, cane, and yeah, I think just cane, and that one I just covered. That last one, what was the last one I just covered? NKTR. I think that's probably about flat. I don't know where we entered, but this one's playing out so far, not impulsively yet, but a lot of, one, two, three divergent highs. And like I say, it's usually three strikes and you're out, referring to three consecutive divergent highs. I rarely see four consecutive divergent highs. It's usually that third one that'll play out. So this one's working out so far and it's profitable. And there's the first target. Not much to be said about that. I don't see any reason. I'd like to see these trend indicators, this PPO drop below that signal line cross below zero. That will open the door up for a move down to T2. But first we have to contend with T1 here, first target, and I'm just sitting tight on that one. And finally, XLP, last of the official trades right now. I'm covering longs and shorts in this video. There it is. We hit the first target today. Nothing else, nothing much more to add. I did an update on the front page. There's that falling wedge, divergent low. I don't know where my lines went here. There's the bullish divergence in place on the 60-minute chart, as you can see. And those divergences are playing out. So we've hit the first target. It's up to you whether you want to book partial full profits there, recycle back in if we get a pullback, or just hold on. Again, you have to define your trading style. Everybody's different, and that's why I list multiple price targets on the trade ideas. And if you want a little more info on that, just check out the FAQ page. You can access that on the top menu of the site. All right, we'll leave it here. And again, I wish everyone a happy weekend. Hopefully you have a nice, relaxing weekend. And I'll follow up next week. We'll see what the markets do, and just remember 3 nights of over 3 days, if you will, of overnight risk. So just be careful going home too long, too short, too heavy in any one stock. Um, and we'll pick things up here on Monday and see how things look. Again, this has been Randy Finney with Right Side of the Chart, and have a great weekend.